This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. Today is 2/22/23, show 467. So markets really got slammed yesterday, Nick.
Yeah, they did, especially coming off of a 3-day holiday, which is a long weekend. Nobody expects that. A lot of people are usually looking for the typical holiday hangover, but markets were hammered yesterday. I mean, it was 2% or more across the board on the downside, and that is a serious decline. The only thing missing from yesterday's fall really was the increase in volume. The volume was pretty good, but it wasn't that super high volume. And even today, the markets are, clinging to the flat line. Sometimes they've been positive, then they've gone to the negative side. So they're fighting over here. But I have to say, it is not a very strong move today. And that tells me there was probably some damage done yesterday on the charts. And I think traders got to be cautious as this recent rally is now showing some serious signs of fatigue.
Yeah, so you think the January effect is well behind us, huh?
I do. I think if it's not over now, it'll be over shortly. It was a great January run. I don't want to take anything away from it. I thought it would happen. It came pretty much on time, and the train pulled into the station. But now, if you've been watching the news lately, trains have been derailing, and this one's about to derail as well.
The market train is coming off the tracks, Nick.
That's it. And you could see it yesterday. There was some, real damage done on a lot of different equities, and we'll see how it plays out. But anytime markets reverse by the tune of 2% or more, and it happens in every single category, meaning all of the major indexes, whether it's the Dow, the S&P, the Nasdaq. I mean, that catches my attention. I've been looking for signs of a high anyway, and that was a pretty good one yesterday. So the market's got work to do. It still has a possible uptick move coming into it, but this is how 2023 is going to be. It's going to be choppy and sloppy. It's not going to go up in a straight line, nor is it going to go down in a straight line. I think it's just going to be choppy waters ahead and, probably stair step lower.
Yeah, my prediction is we'll wind up where we started off January 1st, within 5% of that. That's just my feeling. It's going to be crazy up and back and forth. Eventually the Fed will throw in the towel, and then the fun will begin.
Yeah, I mean, if they're going to throw in a towel, it would have to be towards the second half of this year. I just can't see them doing it right now. And I'll tell you why I say that is if you actually look at the 2-year Treasury note yield, and that's a metric I've talked about on this show really from the very, very beginning of this rate hike cycle, even before it, you're going to notice that that's at 4.66% today. It's down 4 basis points. But the Fed is behind the curve because the Fed funds rate is at 4.50. They need to be ahead of that number. So when the markets were pulling back and the 10-year and the 2-year were the yields were declining, yeah, the Fed was a little bit ahead of that curve, and that caused the rally in the market because people will think, hey, the Fed could pause or even cut. But right now, they can't. They can't cut. They need to be right ahead of that 2-year Treasury note yield, and they're behind it right now. So they have work to do, and that markets are not going to like it if they have to raise rates.
All right. So Toll Brothers, major home builder, earnings reported last night.
Yeah, so Toll Brothers came out with earnings last night. The stock's acting pretty well. It's up $2 today. Home builders have been one of the big winners, obviously, throughout this January effect rally. Lately, they started to come back in. They put a little high in the beginning of February, and they've had some, minor downticking, but they're still holding up well. So this is a key stock in that group because they make more like the luxury for, more extravagant homes than just the typical 3-bedroom, 2-bath. These guys will make bigger homes. And they cater towards the $1 million type house. So this is one to watch for pretty closely. I think it's in the process topping out personally. But today it's holding up well, so we'll keep an eye on it. And that whole industry group, has had quite a run, and just recently it's starting to experience some backing and filling despite some horrible numbers. But Toll Brothers had pretty good numbers, which tell us the high end client is still okay. It's the lower end that is really paying the price here in this kind of economy.
All right. Well, we will keep an eye out on them for sure. Gold today's flat.
Yeah, today we have gold basically flat on the day. If you take a look at gold futures, they're essentially flat, trading around 1840, 1845. They're jumping around a little bit. But remember last week, Kerry, I said that gold would probably trade down to the 1830 level, and that's where we would find a little bit of support. That level was tagged, obviously, a couple days ago on the 17th, and we had a pretty good little uptick bounce. But if we start to consolidate here, I think traders got to be careful. Gold could be setting up for another bear pattern, and that would lead to another leg down for the precious metal. So again, pattern is going to be critical here, as that first level of support was just tested 2 sessions ago.
All right, I'll buy that. Hey, so, looking at natural gas, okay, we keep getting inquiries about it. Well-known commentator, prognosticator out there called for a low on Natgas of $1.18, and we're in the twos now. I mean, it's really gotten slammed. What's your take on Natgas?
So it's funny you bring that up, because yesterday I actually put a Twitter feed post on my Twitter feed, and I said, Natgas just hit a major GAN level. Let's look for the reversal. And today you got Natgas futures up 6%. So I think the low is in for Natgas personally. We'll see if it holds up. But even if it does pull back a little bit, I just can't see Natgas going much lower here. I think it's washed out. And, historically speaking, a lot of traders may not know this, but Natgas generally puts a low in sometime in the first quarter. And I think the low might have been made yesterday. So I own UNG right now, full disclosure. I own call options in UNG. And I own, I own call options in a Natgas stock here as of yesterday as well. So, I'm looking for upside here. We'll see what it does. But good day for Natgas today, as I believe it's trading up over 6% as we speak.
All right, and crude has been sinking as of late. Right now, it's around $74 a barrel.
Yeah, I'm not in love with crude right now. I don't like the chart pattern that it's made recently. I think when you look at crude, 74 is kind of a little bit of a short-term support level, but you have a pattern here on the weekly chart that is not very good. So I would be careful with crude. I'd go with Natgas now, skip crude. We'll get crude lower and potentially a lot lower as well. You have this tension building up in between Russia and Ukraine. You have a lot of efforts to get the price of crude down. And I honestly believe that we'll leave crude alone for the time being. We'll revisit it. You're going to get a chance to own this thing probably around $50. And that's where I would load up with both hands.
All right. So could hit a low of 50. Interesting, though, about nat gas, and that's taken a lot of pressure off of electric rates. And my gut feel is it's not going to last, but we will find out soon enough. Hey, and finally, today we get FOMC minutes release at 2 p.m. Eastern.
Yeah, that's right. So the FOMC announcement will be out at 2 o'clock this afternoon. Many traders, investors want to hear exactly what the central bank is going to say regarding interest rates going forward. Remember, the minutes are basically bullet points of what the Fed wants you to know about the last meeting. I think they're doctored. I think, they can put anything they want in there. It's not a true transcript. These days we have technology. We could get a transcript in a heartbeat. You could do it in a courtroom. So, I never understood the Fed minutes, so to speak, but they're not an exact transcript of the meeting. They're just bullet points of what the Fed wants you to hear from the last meeting. And again, I have to say, I think the Fed has been pretty adamant lately. They've said, even when Jay Powell was talking the last few times during the last Fed announcement, and even that afterwards, he did a Q&A with David Rubenstein, the market reacted positive. And he didn't say anything, in my opinion, that was all that positive, but the market acted like he was going to pivot. But now you just look at the 2-year Treasury note yield and he can't pivot.
Right. All right. That's really interesting. And we will see what happens there. Pretty much that's it for today. We will see you on Friday, Nick. In the meantime, go over to inthemoneystocks.com, see what Nick is doing now, see his extensive trading record, beating the averages for decades. Twitter feeds at ITMS, at Nick Santiago 01, at Kerry Lutz. I now have a blue check mark. They accepted my $8 at Twitter, so I guess I'm making progress here, Nick. And any emails, kl@kerrylutz.com. Put your comments below if you're watching this on the YouTube channel. Nick, we will talk to you on Friday.
Sounds good, Kerry.